Hi, everyone. I'm Jeanette Mulvey, the editor in chief of Co. by the U.S. Chamber of Commerce. I'm excited to welcome you to today's Small Business Update as we kick off Small Business Month. Now more than ever, small business owners must stay informed to navigate issues like inflation, workforce challenges, supply chain disruptions, and a lot more. And we're going to talk about all of that today with Neil Bradley, Executive Vice President, Chief Policy Officer, and Head of Strategic Advocacy here at the U.S. Chamber of Commerce. Hi, Neil.
Hi, Jeanette. It's great to be with you again.
Yeah, thank you so much for doing this. So let's just talk like the biggest issues on every small business owner's mind: inflation and supply chain challenges. Tell us where things stand with that. Do you see any relief coming on either of those fronts anytime soon?
Well, let's start with inflation, Jeanette. It is the number one issue for businesses of all sizes, certainly small businesses, but frankly, for each of us as individuals and families as well. It is remarkable how much prices seem to be going up, up, and up. From an economic standpoint, we haven't seen inflation like this in over 40 years. You have to go back to the late 1970s and the early 1980s, which means as a business challenge, this is something very new for most of the small businesses who are joining us today. Let's talk a little bit about the causes so that we can understand the likelihood for relief. If you remember back to kind of Econ 101, maybe even back to your high school economics class, inflation at its core is really just too much money chasing too few goods. And when that happens, prices go up. And that's exactly what's happening on both sides of the equation today. As a result of the pandemic, we have too few goods. We had supply chain disruptions. We continue to have disruptions for inputs into the United States and final goods for sale because of lockdowns in China. We had major disruptions in the production and the shipping of goods, those supply chain snarls. But we also, during the pandemic, had a fundamental shift in how Americans spend their money. They went from spending money that used to go to services, think about travel or maybe going out to eat or seeing a show. That shifted into purchasing goods, often goods that they were buying and being delivered to their house. So in that moment, demand shifted, and we had at the very same inopportune time bottlenecks in meeting that demand. The second part of the equation is the money side. And largely as a result of Federal Reserve policies over a number of years and the fiscal stimulus provided by Congress, Americans have over $2.5 trillion of excess savings compared to what they would have had if we had stayed on baseline before the pandemic. And all of that money is bolstering increased consumer demand. So if you think about those two things, they're going to take a while to work their way through the system, to get supply chains right, to get more Americans back in the balance between the services that they're procuring and the goods that they're buying, and to work those excess savings through the system. Now, the Federal Reserve is doing its part. It just raised interest rates by half a point. But understand what they're trying to do is slow down demand. They're not working on the supply side of the equation. So even if the Federal Reserve gets this exactly right, we're still in for a lot more inflation over the course of at least the remainder of this year.
So I hear one piece of good news there, which is that people have money to spend, which is, of course, good news for businesses of all sizes. When businesses are dealing with supply chain issues, it often impacts price. And a lot of our small business members and people in the audience today are dealing with having to these pricing challenges where they have to face possibly raising prices for their customers. So can you talk a little bit about pricing, what kind of trends we're seeing, and just if you have any advice for businesses who are trying to balance keeping their customers happy and supplied with their product or service and also raising prices?
Yeah, so businesses are raising prices. And, that's part of what's causing this, including small businesses, and that's often a difficult thing to do. You're worried about losing customers, you're worried about losing market share, maybe in the area that you're operating. But what we're finding is that businesses aren't left with many other options. In fact, we conduct a quarterly survey at the U.S. Chamber with our partners at MetLife, a small business index, and we've been asking small business owners how they are responding to these inflationary pressures. And two-thirds report that they are being forced to raise prices. Now, they have some other strategies as well. Obviously, you can look to cut costs, but there's only so far that you can kind of go in that regard. In many instances, they're looking at the labor side. What can they do on the labor side to achieve savings? Now, that's in direct contradiction to the workforce shortage supply, which is forcing a lot of businesses to raise wages. So you're having to offset. Can you make your current workforce more efficient? Can you use technology to maybe automate certain processes as a means of reducing your labor costs? And that's running headlong into this pressure to pay your existing workers more. And then some businesses are actually taking out loans. I think this was one of the surprising things that when I saw the data, that I didn't initially anticipate, that small businesses are actually borrowing more, I think probably to help offset those higher initial input costs and then figuring out how they're going to recoup that over the long term. That may be an initial short term strategy. We'll have to see as interest rates rise, and they are ticking up. And we know that a lot of small businesses have to finance what they're doing with credit cards and home equity lines of credits. Those are rates that we're seeing going up pretty dramatically at the moment, that may become a less viable option for small businesses, which means I suspect we'll see more pressure on the pricing side throughout the rest of this year.
I want to talk about hiring challenges in a second, but can we just talk a little bit about supply chain challenges because we use that term pretty broadly? Can you talk what specifically is causing these supply chain problems, and if we see any evidence that those challenges are being resolved?
Well, there's a number of things kind of factoring into those supply chain challenges. Let me start with one that everyone kind of saw on the news quite a bit, and those were the 120 ships, cargo container ships, anchored off the ports of Long Beach and Los Angeles. And so that's kind of the quintessential definition of we had goods, they were sitting in a container, they're supposed to be unloaded, they're supposed to be transferred to trucks or to rail lines to move into the country. And maybe it was inventory that your small business had purchased for retail sales. Maybe it was some of the inputs that you use in the manufacturing process, and they're kind of stranded there. There are a number of factors that kind of drove that supply chain kink. Part of it is that we were importing more goods, so there was more stuff trying to get through the narrow funnel all at the same time. We had COVID disruptions at the ports, just like in many other places of work where people contracted COVID and couldn't be at work. And frankly, we were paying the cost of not modernizing some of our ports. The good news is those wait times on ships, the number of ships anchored off, the delay in getting goods has come down dramatically. The bad news is that we just entered negotiations between the port operators and the longshoremen for their contract renewal that's due by the end of June 30th, and that's creating more uncertainty about whether we're going to see potential slowdowns at the ports, or God forbid, even a full strike there that might create new bottlenecks. So that's one aspect of it. Another aspect of it is that we just haven't been able to get a lot of the inputs that you need to finish goods. This is the cars. I talked to a boat manufacturer earlier this week who have boats done and ready to go, except for the computer chip that they need to put in to control the throttle. And so literally thousands of boats waiting to be delivered until they can get that computer chip. And that's true in a lot of things that are being manufactured because of a delay of just not having enough computer chips to finish building things.
Okay. So at least we understand now where these challenges are coming from. Let's talk more about hiring. It's been a challenge for businesses for at least a year now. Are you seeing any signs of improvement in businesses being able to find employees?
Sadly, no. We just got new numbers this week on the number of open jobs in the country. We set a new record, 11.5 million open jobs that employers of all sizes are trying to fill today in the United States. If you compare that to the number of people who are actually looking for work, and we'll get revised numbers tomorrow on this, but they're not going to change all that much. You basically have two open jobs for every person who's out looking for work. And so that is unprecedented in the US economy. We've never had this large of a mismatch between the job demands of employers and the number of people willing to fill those jobs. And so, unfortunately, the macro problem is not getting any better. And employers, and in particular small businesses, are having to get really creative in their own operations to figure out how to fill the open positions that they have.
Yeah, I want to talk a little bit more about that creativity in a second, but do you have a sense of what why there is this gap between open jobs and people looking? I know during the pandemic there were issues related to people not feeling comfortable going back to work, and there were childcare issues and the great resignation, but a lot of that seems to have been resolved, and yet we're still seeing this really significant gap.
Yeah, there's no single answer, but let me put some context around it. If you look at what we call the workforce participation rate, so the number of people in the population who are either at work or looking for work, we're a full percentage point behind where we were in February of 2020 before the pandemic. Now, that doesn't sound like a lot, 1 percentage point, but understand that if we had the same workforce participation that we had in February of 2020, we'd have about 2.5 million more people either working or actively looking for work. And that would help fill a lot of that delta. So, what happened to those people? A whole range of things. For some, it was people who were near retirement who decided that they could comfortably take early retirement. And it's unclear whether they're going to come back to the workforce. By some estimates, there were about 1 million working mothers who were working pre-pandemic, who, because of childcare concerns, lack of available childcare, have left the workforce and have not yet returned. That's a kind of a big source of this. Another is legal immigration. We had restrictions heading into the pandemic on legal immigration, and essentially a stoppage of legal immigration during the pandemic. By some estimates, that's about 1 million college educated immigrants who would be in the workforce today who aren't because of those limitations and those restrictions. And then one good news, kind of good news story, bad news story if you're an existing employer, is that based on our own survey data, about 10% of those who were previously working for someone else who lost their job have now decided to start their own business. And so that's great for entrepreneurship. That's why we set a record number of new business starts last year in the United States. But pretty soon, those new businesses are also going to be looking for employees. And so, in some ways, it's great that entrepreneurialism is doing well, but it's only going to increase the demand for workers.
Yeah. Let's talk. You mentioned childcare, and I think that's a great opportunity for us to talk about some of the strategies that you are seeing businesses employ to help attract workers. So the first one we could talk about is childcare, and maybe you could go over some others as well.
Yeah, so let's start with childcare. It's a very daunting, particularly for a small business, to think about, how do you help your employees with childcare? And there are a couple of interesting strategies that we're seeing small businesses use to frankly take advantage of some of the tax benefits the federal government's provided. The first is as an employee benefit to contract with childcare services whose job it is to help your employees find available childcare in your community. So the employer doesn't have to provide it. Often for particularly new employees, it can be difficult to navigate, but this is a service that will help your employees find available childcare slots. It'll also help in the situation in which if you have an employee who maybe is using relatives or family for childcare, but they have a breakdown in their childcare system or something happens, to provide emergency backup care. And if you provide that as an employer, in addition to being able to deduct it as a business expense, the federal government will give you a tax credit equal to 10% of what you spend on that. So it's a way to give your employees a benefit and actually reduce your tax bill. Similarly, many employers may be familiar with flexible spending accounts in healthcare. So, a benefit that you can provide your employee to help them with their healthcare expenses. And as an employer, it's a tax deductible benefit, just like it would be any other expense. But for the employee, they don't have to pay income taxes on that. And so you can do the same thing for childcare. You can provide up to $5,000 per employee to help them meet their childcare expenses. And it's actually better for the employee than maybe a pay raise, because on the pay raise, they have to pay income taxes and payroll taxes. On this flexible spending account, they don't. So those are some creative ways of providing benefits that don't break the bank for a small business, but help them compete and help address their employee concerns.
And what are some of the other creative strategies you're seeing, Neil?
Well, one is in second chance hiring. If you think about pools of workers that often are overlooked, that can be accessed, it is the formerly incarcerated. And so we're seeing real movement to basically clear away things that may have been barriers to hiring the formerly incarcerated before, either in your employee forms or what you were looking for, or simply going to nonprofit organizations who are helping those who are transitioning out of correctional facilities and identifying job opportunities that are available to them. One of the other things that we see employers doing is rethinking their job qualifications. So, one of the problems we've identified at the US Chamber is sometimes there's a mismatch between what an employer says they need in terms of skills or describing the skills that they need and what a potential employee has. So, of course, off the top of the bat is, are you hiring for a position and advertising it as requiring a college degree when it really doesn't require a college degree? And can you expand your hiring pool by removing that as a qualification? Similarly, are you looking for very specific skills that maybe an potential employee wouldn't identify that they have, but if they have basic skills, it wouldn't take you very long to train them to the level that you want. And so we see a lot of employers rethinking how they're advertising jobs so that they can get to a broader pool of potential job fillers.
That's great advice. Audience, if you have not yet entered questions for Neil, please do that now, because if there are a couple more questions of my own, I'm going to go to the audience Q&A. Neil, we talked about the startup boom that we saw towards the latter end of the pandemic and post-pandemic. Another thing that we saw was first of all, that a lot of startups were e-commerce based, but also, of course, during the pandemic, we saw that a lot of pre-existing businesses either shifted fully to e-commerce or added an e-commerce component to their business. So can you talk a little bit about some of the implications of starting an e-commerce business? Because all of a sudden you're doing business with a much bigger base outside of your immediate locale. And I think there are some implications to that.
Yeah, well, let's start with the positive, right? E-commerce allows you to reach customers that you never would have otherwise been able to reach. And I think one of the reasons our economy is as strong as it is today is that because so many small businesses avail themselves of the opportunity either to use existing platforms or to themselves expand into the e-commerce realm. And it just opened up a whole new world of customers and consumers that they could access. You're exactly right, though, Jeanette, that comes with some kind of complications. Let's start with one of the biggest ones that may be relatively new or that maybe small businesses haven't thought about, and that is on the sales tax side. Now, up until a 2018 Supreme Court decision, sales tax collection actually used to be pretty straightforward. You only had to collect sales tax when you were selling to someone in a state where you had a physical connection, a physical nexus. So that obviously means if you're in my home state of Oklahoma and that's where your physical store is, you collected sales taxes on anyone else you sold in Oklahoma. Now, if you happen to have a sister store, across the border in Kansas, then you would also have to collect in Kansas. In 2018, the Supreme Court threw all of that out and essentially said that states can collect sales tax on items sold into their state without that physical nexus. That essentially you could have what they call an economic nexus into the state. Since 2018, 46 states have implemented their own definitions of a nexus. And, of course, 50 states being 50 states and 46 states being 46 states, they're all somewhat different. And so it's a complex thing to manage. But in general, the vast majority of states require that if you have sales above $100,000 into a particular state, then you've established a nexus into that state, and you're going to be required to remit sales tax to that state. Now, the good news is there's lots of computer software and accounting systems that can help you manage this, but you don't want to get caught not remitting the appropriate level of taxes. So if you are on an e-commerce platform, if you are selling, make sure you're collecting and remitting the right amount of sales taxes to the various states where you have customers.
Now, a lot of e-commerce platforms actually will do that for you. So I
That's correct.
think that's something for small businesses to consider when they're choosing one, because some do that for you and take that work out of it. My last question before we go to the audience Q&A. Actually, I have two more. I'm sorry. So one thing we talk about e-commerce is a lot of businesses, if they either e-commerce or not, accept payments via peer-to-peer payment platforms like Venmo or PayPal. So there have been some changes in the regulations around tax reporting and filing for peer-to-peer payment systems that I think are very important. Could you just quickly go over that?
Absolutely. So let me start with good news. The good news is that there hasn't been a tax increase. So it's not like Congress came in and raised taxes on using these peer-to-peer platforms. What happened is that Congress and the IRS updated reporting requirements so that if you're using a peer-to-peer platform for your business, for things that you're selling, then the platform is now required at the end of each year, the beginning of each year for the prior year, at the end of the calendar year, to send to you and to the IRS a report if they processed more than $600 in transactions for your business. So many of the folks in the audience may be familiar with getting these 1099 type forms that show your payments that came in and the money that you received and that you would owe taxes on. This is yet another one of those forms that will show proceeds that your business earned via payments in these platforms, and that you'll have to pay taxes on. You would have to pay taxes on it anyway. Should have been included in your income, but you'll know that it'll also be reported to the IRS. One of the things that has tripped some people up, particularly for even smaller businesses, is if the owner was using their personal Venmo or PayPal account or something like that, both for personal transactions and for business transactions, they could get confused, and you're left at the beginning of the year trying to figure out what were those payments for, and was that something personal or something business? Of course, a lot of small businesses have separated those things to make sure that they don't have those type of accounting errors. Some of the platforms provide an option that allow you to identify business transactions or personal transactions so that you don't run into that problem. But just be aware, if you haven't adopted one of those solutions yet, you could kind of be in a record-keeping mess, if you will, when you get that 1099.
Okay, good. That's great advice. And thank you for clarifying that. before we go to the audience Q&A, just one of the things we've noticed at Co, because we can see the kinds of articles on Co that are getting a lot of traffic, is that we've seen a big increase in the number of people looking for information on how to get their businesses certified as woman-owned or veteran-owned, minority-owned. We've really seen a huge increase in people looking for that information. I think part of that is people recognizing the opportunity to apply for government contracts, but also I think people recognizing that customers care about who they're doing business with, and so they care about the identity of the business owner. Can you talk about whether you have seen that increase as well? What if you think it's important to become certified as a business owner?
Yeah, we've absolutely seen that, and a lot of interest in this. And if you are a minority-owned business or a woman-owned business or a veteran-owned business, it can make a lot of sense to get one of those certifications. I think my best advice to people is identify what you're trying to accomplish in that goal. Because that will kind of steer you in any number of certifications you might want to go down. So there's not a universal minority owned business certification, if you will. So if you want to do business with the federal government has a certification system. Many state and local governments also have set asides for minority or female owned or veteran owned businesses in their own government contracts. Some of them rely on the federal certification. Some of them have their own certifications. And so if your goal is really to access a contract with the state government or the local government, figure out what they use because that might send you in the direction you want to go. And of course, there's a lot of private certifications and groups out there that will give a certification for a minority or woman-owned or veteran-owned business. And if your goal is that you just want to prominently display that and you're not really interested in government contracts, that might be an easier way to identify yourself as such a business and to demonstrate that you've been certified as such. So figure out your goal and then figure out which certification best will help you achieve that goal.
Thank you. Let's go to the audience Q&A. The first question I have for you, Neil, is what are some of the top metrics you're watching to indicate the trajectory of the economy?
At the moment, the things I'm watching the most because I'm most concerned about inflation is I'm watching what's happening in the consumer price index and where the trajectory of that going and how the composition of inflation is changing. For example, one of the things that I expect we will see over the course of the rest of this year is a significant run up in the price of shelter. Shelter is one of the biggest components of household expenses, and therefore it's one of the biggest components of how we measure inflation, the consumer price index. Why do I think we're going to see a run up in inflation? Principally because we're about 4 million housing units short in the United States of what we needed to construct to keep up with population changes. Last year, we saw a 20% increase in the value of existing homes. And now, as people who are renting have their leases coming due, those rents are going to adjust upward to reflect that lack of housing and that increase in housing value. So that's going to be a new inflationary pressure that we haven't experienced. The second data point that I tend to look at is workforce participation. I want to get an indication, is it going to get easier to hire in the future or is it going to keep getting harder? And one of the easiest ways to measure that is how many people are participating in the workforce and looking for work because that can give us a sense of how that's going. I think those two things will be the principal determinants of how high the Fed has to raise interest rates and the implications for how long we're in this high inflationary environment.
Okay. Can you give us an update on the relief for restaurants and other hard hit small businesses, which passed the House but is currently in the Senate?
Yeah. So for those who aren't familiar, you'll remember back in the pandemic, the height of the pandemic, a number of specific programs were created for particular industries, most notably the restaurant industry, live venue grants, some things that would directly help those that were most targeted. Those programs ran out of funding, so Congress didn't initially appropriate enough, and there's been a push to add additional funding. That has cleared the House. It's not cleared the Senate. Advocates kind of continue to lobby. There is bipartisan support for it, but in all honesty, it's really difficult to see a path forward at the moment where this can become law. That could change. Senators could change their mind on this, but as it stands today, it's difficult to see a path where that gets enacted.
This person asks, how can small businesses compete with large companies for top talent?
Well, I think you have to focus on your unique value proposition. So, one of the concerns we hear from small businesses is that, we see these large businesses with huge wage increases that might be difficult, especially difficult for a small business to match. I think the benefits that small businesses have are the things that maybe larger companies can't provide. It is that sense of community and family often in a small business. It's also flexibility. If you look at surveys of workers and potential workers, one of the things that they say they value the most is more work-life balance and flexibility. So the idea of being in an office 5 days a week, 9 to 5, that has some negative associations for them, and that they would trade lower pay for increased flexibility. Often, smaller businesses can do a better job providing that type of flexibility to their employees and working it out where an employee, depending on the type of business, might be able to have more flexible hours or an ability to work more remotely at times. If you can do that in your business, I think that's an opportunity to have a distinct advantage. And then I think also thinking through that, as we talked about childcare earlier, for example, you don't have to go figure out how to open a childcare center. You can provide some at a modest cost, some additional benefits for your employees that show that you're addressing their concerns and that you're a workplace who's going to help them navigate that maybe a bigger business just doesn't have the wherewithal to do. And so I would encourage businesses to look at those type of benefits that they might be able to provide as well.
Okay, thank you. Here's a question about EIDL loans. So first, one thing I learned during the pandemic about EIDL loans is that the government creates a special EIDL loan for individual needs. So there was a COVID EIDL loan. Is that correct?
There was, yes.
Okay, so this person's question is about extended EIDL loans, but can you just clarify, can you still get a COVID loan? Number one.
So that is a great question. So let me answer that in backing up. EIDL loans always exist. EIDL loans exist for when you have a declaration of a natural disaster and you have a small business that's been harmed by that disaster. And so EIDL loans are kind of a permanent structure of the SBA to help small businesses respond to a disaster. What happened during COVID wasn't a hurricane or a tornado. It was a pandemic, and Congress recognized it as its own disaster and made EIDL loans available. And so I actually don't know the answer of whether you could still apply today and get an EIDL loan on the basis of business disruption caused by COVID. I think the answer is no, but I'm not certain of that. So you'll want to check on the SBA website. I think the applications have been closed for that, but that's where you can find out, sba.gov. And then you have repayment issues. And so there has been this issue about interest deferment and extending interest deferment and payment deferments. And that is something that has been extended for some of these long-term COVID EIDL loans. That's not going to continue indefinitely. At some point, borrowers will have to pay that money back, and they'll have to pay with the relatively low interest rates in which the loan was made. But there has been some recent short-term relief on the interest side.
Yes, and now I think that might be what that question was about, was extension of payment. So I think I may have misunderstood the question. This person is asking about Build Back Better, whether that is, if you expect that will pass.
At the moment, I don't believe it's likely to pass. So last November, the House of Representatives passed about a $3 trillion Build Back Better tax and kind of spending bill. It became pretty clear in December that that bill didn't have the 51 votes necessary to pass in the Senate. There's been talk of a much smaller, slimmer bill, but it's proven difficult to get consensus in the Senate on what would be in that smaller bill and if there's an agreement to pass it. We remain concerned at the U.S. Chamber that some of the tax increases in that bill would actually make it harder for businesses to make the investments they need to make to deal with rising inflation and to deal with the labor shortage. So in many ways, it would actually make it harder to address those twin headwinds that we're facing in the economy. That would obviously then trickle down to small businesses as well. And then secondly, that the spending, additional spending at this time would actually create more demand, and the creation of more near-term demand would actually also put upward pressure on inflation. So we remain concerned that even a smaller bill at this moment, when our number one concern has to be defeating inflation and addressing the worker shortage crisis, that's the wrong way forward.
Okay. I have a question here about timing on getting an SBA loan. Do you know if there is a particular delay right now on being approved for SBA loans in general, not EIDL loans specifically?
I'm not aware of any particular delay. That's not something that folks have raised with me. But we'll take a look and try to learn more. But that's not a problem that of recent has been raised.
Okay. One other question, and I'm not sure that we can answer it, but I mentioned the trends that Co is seeing in people wanting to be certified, wanting their businesses to be certified. We're also seeing a trend in people looking for information on how to either start a non or not-for-profit or add a non or not-for-profit element to an existing for-profit business. So there's definitely a trend there. And this person is asking whether there's any relief available or programs available for nonprofits or community-based organizations who are still struggling post-pandemic.
Yeah, so I mean, a lot of our, like most of the pandemic relief programs, including for small businesses and for nonprofits, have expired. So there's some kind of residual relief that maybe some of those are experiencing. But if you have a nonprofit or even a small business and you haven't accessed relief yet, really the time has passed on that to be able to avail yourself of those programs. Of course, to your point, Jeanette, about starting, a nonprofit, we also are seeing a lot of interest in that as well. And of course, if that is something that's of interest to anyone viewing today, just remember you file for nonprofit status. It's really important that you do that from a tax perspective, both from not being taxed on your end, but the ability to accept charitable deductions. And so you can't just declare yourself a nonprofit. You do have to file and be approved for that nonprofit tax status.
That's great. Thank you. Neil, that is actually all of the questions I have time for today. So I want to thank you on behalf of the audience for all of your advice. I know this is always very valuable to all of our audience members. So thank you.
Thanks, Jeanette, and thanks everyone for joining us today.
Yes. So before we let everyone go, actually, we have a message from the Honorable Isabella Casillas Guzman, Administrator of the U.S. Small Business Administration, who will provide a brief overview of what is top of mind for the SBA right now and what the current administration is working on. So we're going to watch that now.
Thank you, Jeanette, for that warm introduction, and also for your incredible work on CO, which is an amazing resource for our nation's small businesses. As Jeanette shared, I have the honor of serving in the Biden-Harris administration, leading the federal agency responsible for advancing the American dream of starting and growing a business. This week is special. President Biden has declared it National Small Business Week, and I'm traveling across the country to celebrate the work of you and all of our nation's 32.5 million small businesses and innovative startups who work hard with pure grit, determination, and ingenuity every single day to define our neighborhoods, innovate, and create the products and services we need and love. During my first year leading the SBA, we again scaled to support millions of our small businesses with billions of dollars in crucial economic relief and new programs. Our agency typically outputs $40 billion a year, and in the president's first year, we delivered $500 billion in relief funds and core capital programs. Programs I know you all know well: PPP, the COVID Economic Injury Disaster Loans and Advance Grants, the Restaurant Revitalization Fund, and much more. And in the Biden-Harris administration, we prioritized helping the smallest of the small and underserved entrepreneurs and our communities at large access that relief with success. Now, as our nation experiences a historic recovery from the pandemic under President Biden and Vice President Harris's leadership, with record job creation and economic growth, we're focused on transforming the SBA to meet you where you are with the customer-first, technology-forward, and equitable approach to all we do. This work couldn't be more crucial or timely, as entrepreneurship is one of the strongest forces powering America's historic economic recovery today. We're in the midst of a small business boom as Americans launch businesses at record rates. In 2021 alone, 5.4 million Americans applied to start a business, more than 20% higher than any previous year on record. And businesses with fewer than 50 employees created 1.9 million jobs just in the first 3 quarters of 2021, the highest rate of small business job creation ever recorded. And despite or because of the extreme hardships that people of color and women have faced early on in the pandemic, they are leading this small business boom and starting their businesses at the fastest rates, as they have been for the past decade. I recently joined President Biden to meet with these new 2021 starts, including Jennifer of Unique Crafts in Miami, who shared that she was able to start and grow her engraving business last year because of the child tax credit, and thanks to the free trainings and advice she received from the Small Business Administration's network of small business centers and advisors. The Biden-Harris administration has invested equitably in America, and this has helped ensure more entrepreneurs like Jennifer can succeed. Now, as more Americans pursue their dreams of business ownership and invest in their futures, we want to remove barriers and open doors to opportunities by making more products and strengthening supply chains in America, innovating to advance America's lead in new industries, rebuilding our infrastructure with investments from the bipartisan infrastructure law, or redefining our local main streets. Our new startups and established businesses are working hard to grow their ideas into successful firms and leverage these opportunities. We at the SBA must ensure they can continue to create jobs and produce to spur our economy. And we know that challenges remain. We are still facing global supply chain disruptions, inflation, and a tight labor market. The Biden-Harris administration is doing its part to help address rising energy costs and lower pocketbook costs like childcare and healthcare, as well as support fair competition and a more productive economy so small businesses can compete. And the SBA is doing our part to adapt and scale our products and services to help you navigate these challenges and strengthen your business strategies and operations to continue to survive and thrive. That is our mission, to help you start, grow, and build resilient businesses by focusing on the core elements of entrepreneurial success: access to capital, markets for revenue growth opportunities, technical training and support networks for knowledge and connection. I meet with successful small businesses across the country, and what I hear most from those who have used SBA's resources is how surprised and relieved they were to find our critical products and services, how transformational the services were for their business, and in true entrepreneurial form, putting community first, how much they wished more of their fellow entrepreneurs knew about the services as well. During the pandemic, we learned that connections are critical and that there are gaps in access. President Biden understands that not all entrepreneurs, and especially our underserved entrepreneurs, have lawyers or CPAs on speed dial, and he believes they should be able to talk to someone to help them navigate government resources and all resources. And under President Biden's leadership, we're expanding our local footprint in underserved communities for women, people of color, veterans, rural communities, and all small businesses, thanks to the American Rescue Plan, which funded $100 million for a community navigator program. These navigators are like social workers for your business, and now we have an authentic network of 51 hub partners and more than 440 local spoke partners. We are all working hard to make sure more business owners know about and take advantage of our great resources at the SBA. And these are what the navigators are doing, connecting you to capital and market access programs and the learnings that you need to thrive. Today, only 44% of small businesses get their funding from a bank, and the SBA guarantees loans to help more lenders provide affordable capital. The SBA is here to help small businesses get that loan to buy new equipment or a new building through our 504 loan program, or getting our 7A working capital loan, or our bonding to perform on a contract, or getting a research grant for an innovative new product. And in the Biden-Harris administration, we're transforming our programs to get more loans, investments, and innovation grants into the hands of more small businesses to meet you where you are with trusted local partners. Vice President Harris and I recently announced that the SBA is extending, expanding, and overhauling one of our critical loan programs, Community Advantage, which is distributed through our mission-based lenders and communities. We are simplifying eligibility and underwriting and creating flexibility so you can grow your business. And we know capital is just half the equation. Small businesses also need revenue opportunities. 3 out of 4 small businesses during COVID relied on digital tools to survive. And we believe that small businesses will need to continue to leverage technology to expand in markets, strengthen business operations, and grow online. We recently launched SBA's Small Business Digital Alliance, partnering with leading technology companies, including Google, Meta, Visa, and others, to deliver free tools, trainings, and resources to help you power up your pivot, engage better with your customers, and grow that base of loyal customers, building your workforce and improving operational efficiency. And we're working to help more small businesses tap into opportunities to do business with the world's largest buyer, which is the US government. There are incredible opportunities on the horizon with President Biden's Made in America initiative, transformational federal procurement reforms, and historic $1.2 trillion investments through the bipartisan infrastructure law. The SBA has expert business opportunity specialists and advisors across the country to help you get contract ready so you can make and sell to Uncle Sam and lead the rebuilding of our roads, bridges, and other critical systems. I hope that you visit sba.gov and find a local partner to start and build your team with the SBA today. National Small Business Week 2022 is themed Building a Better America Through Entrepreneurship. We know that when we level up success outcomes for all of our 32.5 million small businesses, including those startups coming out of the small business boom, that we can better succeed as a nation, growing our economy, increasing our global competitiveness, and strengthening our democracy. Thank you for all that you do for your families, your employees, your communities, and your nation. And let the SBA be a part of that success into the future. Thank you so much.
And thank you to Administrator Guzman for her remarks today. And of course, thank you to Neil, who always is super helpful and has great answers to everyone's questions. We hope that we answered yours today. I hope that you will check out Co, which you can access at Grow with Co. We curated some of our articles for you right there on your screen, and they will also be coming to you in your inbox after this event, but you can visit Co anytime. We are publishing new articles every day to help you start, run, and grow your business. You will also, after this event, be receiving some invitations to our other Small Business Month programming, including our next event, which is the 4th episode of Start, Run, Grow, which will be on May 19th. And we will be focusing on how you can use digital content in your marketing strategy. So that's it for today. Thank you to everyone for joining me, and I will see you next time.